What's up, people? Welcome back to Hit the Bid. You got to be in the chat room today because that's the only way you're going to make money today, okay? Listen to me. As much as I want to talk about the revolution and slap parties and barking it out today, let's talk serious about what's going to happen. All right, well, if you didn't buy stocks on Friday, you lost. We're playing this gap up. How are we going to do it? You know how much I hate gap ups. You know why I hate gap ups? Because all the stocks that I wanted to buy on Friday that I didn't buy are gapped up 2 or 3 points today. So, are we going to just jump right in and buy this gap up, or are we going to wait for the fade? The fade, my friends. The fade is what normal people do at the beginning of the market when it's gapping up 400 points. Generally, the market's going to come in a little bit. So, if you want to play this gap up, which I'm not suggesting you do today, because we might have one of these markets where it just opens up high and just continues to go higher because nobody wants to miss the boat. This is the I don't want to miss the boat rally. Maybe we saw the bottom on Friday. I don't want to miss the boat. You better pile in right now at the open. Buy whatever you can. Oh my God, this is it. I don't think so. We still have problems. So what's going to happen at the open, I hope, is that we give back about half of this gap. Then start looking for your entries, because I think the market's going to be higher from where we opened today on Friday. Remember, this is earnings week also, so we're going to have a lot of different companies influencing the market. I believe Intel's coming out, Google. But right now, it's not about earnings, it's not about anything. It's about momentum and people not wanting to miss the boat. The psyche right now is they don't want to be out of this market if it starts to rebound. But in reality, how much could we actually rebound considering everything is pretty awful still, okay? But we want to make money. Now, the nickel and dime options plays, they're over with. You missed them. If you bought some options on Friday, you're going to make some good money today. But if you didn't, too bad. Like the Zolt, the $10 calls, they were pretty much worthless. Now they're going to be worth $2 or $3. So we missed that one. The Chesapeake Energy, looking at those $20 calls, you missed it. The Google, basically everything. So what we're going to do is we're going to look at the market, and see the stocks. If they're reasonable and you still think they're going to go higher, obviously you're going to get in, depending on what your objective here is. My objective is to try to make as much money as humanly possible this week and then just basically hang on and see what goes on for the rest of the week. I don't think that it's over, okay? And every person's going to come out there, oh, you want to retest that low from Friday to make a real bottom. It's true. As much as I don't think that we're going to see those lows again, I don't think the Dow Jones is going to go below 8,000 anymore, okay? I think the Dow Jones might have seen its lows. So if you want to start looking at some Dow Jones stocks, that might be good. The ExxonMobil, the GE, two of my favorites for as far as the Dow Jones is concerned. Now, as far as everything else, I am not buying this open, okay? Now, here's what I'm doing. Considering I think the market is going to be higher on Friday from where it is at the open today, I'm going to be selling naked puts. Basically what I'm doing is, for instance, on the Chesapeake, we saw the low hit of 12. So if there's any value on a 12.50 put on Chesapeake, you sell that put. So as long as the stock stays above 12.5, you get to keep that premium. Granted, if the stock goes below 12.5, you're going to get put the stock into your account. But the thing is, that's what we're betting on. We're betting on that we're not going to go test those lows. So find some stocks that you like and look at what the put value is, and you're betting that the stock will stay above that strike value. Now with Chesapeake Energy, basically we don't even need the stock to go up anymore. If it stays here for the rest of the week, you get to keep that money. Now a lot of the premium is going to come out of the market at the open here. You're not even going to be able to get prints because the market makers are going to be scumbags and they're not going to give you prints at the open anyway. So wait 15, 20 minutes, maybe 10, 15, see how this all pans out, and get into the chat room. I'm going to tell you what I'm doing. I'm loving the GTI. I'm probably going to be buying blocks of that again. The EXM. The cheaper the stock, the better. The more a stock fell over the last month and a half, the better also. I like the Potash, the IPI. I like those. I love Google, because if the market is going to follow through today, Google's not going to be up 20 for the week. It's probably going to be up about 50 or 70 or maybe even 100 points for the week. So as much as I don't like buying a stock that's already gapped up 20 points, I might be looking at some Google. Not a lot, but just to dip my toe in some Google. As far as any indexes, you might want to buy the ETFs today also, because the market, put it this way, if we sell this market off and go red today, it's going to be fantastic in a way, because I think it's going to be another buying opportunity, but that's going to scare the hell out of a lot of people if we go red at any point today. But what it might be is just a shakeout, and then you're going to get faked out, and then you're going to break out. A classic faux show bro might be happening. So get into the chat room, hitthebid.net, hit thebid.net, go to the chat room, we'll be hanging out. We're going to try to make you some money. And if there's anything out there that's still worth a shot, but now the risk reward isn't in your favor anymore because the stocks have made the V bottom and your nickel and dime options, now you're taking extreme long shots. Now you need a second or maybe even a third rally with a leg up to make some money. But I'll be sorting through it all for you, all right? I think the DRYS also hit a low of 16. So a $15 put on the dry is still going to have some value. And if that stock reverses down again, I don't know. Where's it going to go? $10? Come on now. Some stocks were just way, way oversold. I know it's a technical term and all, and in a bear market there's no such thing, but it's all we got to hang on to right now. The Zolt, that was our cash cow. Zolt under $8 was just stupid. Okay, as much as I hate the company, how they manage the company, under $8, that was just retarded. $10 calls, they didn't want to print me. That's another thing about the market makers right now. On Friday, they knew what I wanted to do, so there was options trading at 10-cent bid, but they were 90-cent offer because they don't want us to make money. That's the thing. The market never wants you to make money. It's hard. If it was easy, everybody would be making money. Wouldn't have to worry about anything. So, come to the chat room. Hit thebid.net. I appreciate all my noobs and all you New World Order guys and Destruction of America guys. You can all suck it. Suck it big time.